You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we're back once again with TWIFO, This Week in Futures Options, a program where the name pretty much says it all. It breaks down the week that was and indeed still is from a futures options perspective. That goes across the broad spectrum of products, maybe some equities, maybe some crude and energy, maybe some metals, maybe some ags, maybe some treasuries, crypto. You never know what products are going to make it onto TWIFO. That's why you got to tune in every week. This time, Thursday, 1:30 p.m. Central. If you want the live version, you want the podcast, just subscribe to it on your platform of choice, your iTunes, TuneIn, Stitcher, or subscribe our mobile app. It's all available there. Go to our website, go to the CME website. It's available in all those places. Got to get up on FTSERussell.com too. Then it'll be complete in the trifecta of availability out there on the show. And of course, however you listen, live after the fact, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do, yes indeed we do, like to hear from you guys. And joining me on the program today, going to be joined a little bit later by my cohort, my partner in crime, Mr. Nick Howard from Bantix, who's coming in from offsite as we speak. But I'm pleased to say we're joined once again on the old program, not quite live in person in the studio, but the next best thing via the magic of telephone by our old buddy, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Sean, welcome back to TWIFO, sir. It has been too long.
It's been way too long. And Mark, thanks again for having me on the show. I'm really looking forward to today. And I think I mentioned, unfortunately, I'm not going to be able to stay on for the entire show, but it's always good to be here. And we're very excited to be here with our partner, our additional partner in crime, of who I will let you announce.
Yes, your other partner in crime, of course. He's our old friend, actually joining us in the CME Group hot seat today. Our old friend on the old show, Long and Short of Futures Options. He's making his first appearance on TWIFO, that's our error, Tom. We needed to get you on sooner. He is Tom Boggs, the Executive Director of Equity Products over there at CME Group. Tom, welcome to This Week in Futures Options.
Thank you, Mark and Sean. It's a privilege to join you guys on this discussion today.
And Tom, really quickly before we dive into it, give us an overview. You haven't been on this program before for some of our newer listeners. Give a little bit quick overview of your background and what it is that the Executive Director of Equity Products does at CME day to day.
Sure. I manage specifically index options at CME. So I'm a product manager within the equity business team, and it's been my privilege for the last 14 years to help build the options suite here at CME, working with multiple internal teams, as well as the other asset classes to build great products and great platforms for our options initiatives.
Well, let's get to some of those products, some of those platforms. We're lucky to have both of you here at the top of the show because both of you play in the equity side of the space. We'll kick it off with Sean and FTSE Russell land because I know it's a busy day. Everyone's moving and shaking, a lot of moving co-host seats here on the old show. But Sean, it's been a couple of weeks since you've been on the show with us. I think the last time you chimed in, you joined us with Ron Bundy, our other friend here on the show from FTSE Russell HQ over there in Seattle. So what's been going on with you since then? What's taken up all your time hither and yon, and what's some of the big developments in FTSE Russell land since the last time we talked?
Business continues to grow, and I'm going to let Tom Boggs kind of second the comments I'm about to make, but volumes and open interest in the Russell Suite at CME have just continued to grow. I think with the the rally of the Russell 2000, its performance as an index has brought volatility in, and volumes in the last couple of weeks has been just slightly less than the robustness that we saw in the early summer, but remains strong. We're just under 600,000 contracts of open interest. We're trading 130 plus thousand average daily volume. Client demand continues. Client acquisition continues at CME Group. They've got just record numbers of unique traders of the product. DTIC continues to perform every day. Almost every day, there's some great institutional business going through. The entire ecosystem of trading from the prop side to retail are all really enjoying good, deep liquid markets at CME Group trading the products. And I can't forget our other important partner and this business is CBOE. Volumes there are probably in the same situation, but again, they've got 600,000 plus open interest in the options business over at CBOE as well. Sorry for mentioning that to you, Tom, but it's all part of the same ecosystem, and volume begets volume in the Russell product. So we're very excited for where the business is and where it's going.
Yeah, Tom, that's an interesting point. We haven't had a chance to have you come on and kind of chat with Sean and the FTSE team, so maybe we'll start there. We'll get to some of the other products you got cooking, a lot of things cooking in the equity complex in a second. But first, give us your thoughts. Obviously, it's been about a year now since we've had the grand return of the Russell 2000 over there to CME. So give us some of your thoughts on what's been going on there, the year that you've seen some of the interesting trends, and what's going on from your perspective, from CME perspective on the FTSE Russell complex. Then we'll get into some of the other fun stuff.
Sure. So it's been a spectacular first year plus since July 2017 with our return of the Russell campaign. As Sean highlighted, we got off to a great start and have significant open interest. On the options side, we're doing just under about 3,000 contracts per day, which I think is a good start, but we have more room to grow. We've recently seen additional retail FCMs start to probe to adopt the product for their own end users. And as you know, it's easy for an exchange or an index company to create product, but our whole industry is based on client demand. So we responded to that demand by repartnering with Russell, and we think that demand will continue to grow.
Yeah, we're seeing some of that right now. By the way, listeners, you guys can follow along, not just with the live stream, Mixler.com, but you can generate your own reports, see the action for yourselves. Don't take our words for it. See it for yourself. It's over there at cmegroup.com/TWIFO, TWIFO. If you do that, you'll see some of the reports we're looking at right now. Russell 2000 E-mini options, open interest up again this week, up about 9%. So continuing to grow out there. Seeing the action out there, predominantly the action looks like it's coming up here. About a third of the paper this week was coming in that straight up SEP contracts. We talk a lot about weeklies, and that is a lot of the story when it comes to equity options, but the SEP contract doing the lion's share of the business. The Russell coming in right now about 1720 as we're coming into the showtime. 1710 puts where the action is this week. So near term hedging kind of being the action go-to source. That's also reflected in the skew. We're seeing the skew getting a little bit richer to the puts this week out there in the Russell 2000. The puts are about 16% risk to the at-the-money compared to this historical about a week ago when it was about 11, 12%. So a little bit more juice to the puts. The calls offered a little more, about 11%. They were about 9.5% cheap to the at-the-money this time last week. So calls more offered, puts more bid, kind of reflecting what we're seeing out there in the markets, a little bit more concern. Also seeing that volatility spread between the Russell and the S&P coming in. The Russell RVX, of course, is the Russell volatility right about 16 and a quarter. VIX hovering right about 14.75, so about a 1.5 spread there on the narrower portion of that spread. It has been up to about 2.5 and over 3 of those two. Sometimes when that spread gets narrow, there's some interest there as well. Sean, I know you have to hop off, so I won't keep you too much longer. But any last thoughts you have? Actually, here's what I'll leave you with. I'm going to cheat. I'm going to bump up one listener question that came in a little while ago and I think is right up your alley. So I'll let you finish on this one. This listener question comes from the easy to say handle of 56T9. They want to know, I like Russell 2000, have been following the volatility. From what I understand, there used to be options on the RVX index, but these no longer appear to trade. What happened, and will they be relisted anytime soon? I, for one, would love to trade them. So, Sean, this is kind of echoing what I've been saying to you for a while. People want to be able to trade more options on Russell volatility. Do you have any teases, any good hints you can leave us with, sir?
On the product front, I think, as you heard Tom Boggs mention, it's all about client demand. And as clients, whether they be retail, institutional, that ecosystem together combined with their desire for product brings that product to life. So it's probably more an exchange question rather than an index question. So I'll let Tom kind of dive more into the client demand color of that question, if that's okay.
That's fine. I know you have to hop off, so anything you want to leave us with before you hop off, sir? Now is the time. The floor is yours. What's cooking in FTSE Russell land?
Thank you very much for having me on the show again today. Just to reiterate, volume and open interest is we value our incredible partnerships with CME Group in a very big way, and along with our partnership with you, Mark, and I enjoy personally being on this show with you. So thanks for having me. And I apologize that I got to hop off.
We got to get you in studio next time for some nice, tasty beverages after the show. Maybe get some burgers. It'll be good. What do you say?
I'm coming. I will be there.
All right. Maybe next week we'll get you live in the studio. Sean's off to the world of FTSE Russell, always moving, always evolving. Things are cooking out there. So he heard you coming on, Tom, so he wanted to hop on. I'm just kidding. Of course, interesting stuff. But this gives us some time. I really want to drill in on to the equities complex. A lot of things are cooking. A lot of our listeners like talking equities, too, so they like it when on the show when we get into a little bit of equities. We had the numbers coming out recently for August out of there at CME. Strong overall for CME equities. Some areas were a little bit more challenging. Others had robust volume. Overall, I think the over equity volume down about 12% in August compared to August of last year, about 2.4 million contracts per day. There were some bright spots, though. EMini NASDAQ 100 futures, that ADV up about 1%, about 330,000. EMini Dow futures and options, ADV up about 5%, about 130,000 contracts. And, of course, the big dog, the EMini S&P 500, continues to light it up 7% to 41,000 contracts ADV. Monday weeklies also, Wednesday weekly, those are the Wednesday weeklies, I should say, up 7%. The Monday weeklies also up about 11% to 38,000 contracts. So some interest there. I think, Tom, the last time you and I spoke on the other show, about a year and a half ago, 2 years ago, the conversation was all about short duration, about weeklies. Fast forward a year or two, nothing's changed. Everybody still loves weeklies. Hot, Tom?
Sure. So that's probably why you named your show the Weekly Show, right, Mark?
Pretty much, pretty close. This week in futures options, yes, we had some genius on the branding side there.
So I'll throw out some numbers. Year to date in equity index options, 90% of our volume was traded in the first 90 days of our expiration calendar. So pretty significant commitment to the short-term focus. When many of us started in the industry, we had 12 expirations a year. Remember that, Mark?
Yeah, we joked about this on this show before, about how Expiration Friday used to be a thing, used to be a big thing, once a month, and you really had to have your A game on that day. And now it's not only is it every Friday, but it's every Monday, every Wednesday. How long, Tom, till it's every day of the week?
Well, we have all but Tuesday and Thursday now, so I think we can live with what we have. So this year we're going to have 159 expirations. So what we've done here is, again, with listening to customer demand, giving people more precision for the duration of the options, which especially was very important during our periods of low volatility when there wasn't much action taking place for the trading community, and it gave people a way to trade the weekly economic numbers, for example, more in a tighter fashion. And it's a really good example of that evolution of the CME options growth story, listening to customer demand. Now, the other asset classes also have weekly options. So it's been a significant addition to our suite here. Recently, we changed our strike price methodology for S&P 500 options, both the floor product and the Globex product, to trim the number of strikes that are available to investors, reducing those strikes by 40% as a way to increase liquidity in the, let's say, most used strike. So without really reducing the opportunities for investors, we think we've enhanced liquidity. And I'm going to quote our friend J.B. McKenzie at TD Ameritrade, if I will. He says, with this change, CME Group will improve the efficiency and simplicity of its options on futures markets and ultimately the liquidity of the market. This will make it easier for retail clients to make strike selections at a time when their interest in options on futures continues to grow. So that was one of our projects this year. I had inherited a legacy strike listing policy that I thought it was time to adjust. So,
I like that you mentioned that, Tom, because that's something we've been talking about for a while on a lot of our shows on the network. I mean, not just this one, where we kind of break down the notion that, there is a challenge now to whether you're a liquidity provider or you're just a basic retail guy, however you play in the market's institutional customer. It's just so many strikes, so many of them you have to quote and update and keep an eye on when a lot of them, quite frankly, aren't really trading. So I think that you guys have taken some proactive steps to actually, it's hard to say that, delisting could be good for the business, but that actually, I think we're at that point. We're delisting some of the less active stuff, taking some of that, off the radar, off the screens of the people out there having to worry about that. I think that actually could be a good thing. How did you guys go about determining which strikes to delist? Was it just a percentage out of the money thing? How did you go about that?
Well, what we did is revisited the strike listing policy and started to talk to our key customers on the liquidity provider side as well as the buy side to address. The first question was this presenting a problem? And in terms of messaging capacity, confusion, etc., everybody agreed we would benefit by coming up with a leaner listing policy. And then, although I say we respond quickly to customer demand, a key change over the last few years at CME is we deeply validate every initiative before we execute it. So in the old days, we might have just done this very quickly. I'm embarrassed to say it took me about a year to get this accomplished, but basically it was a survey to our key participants and some back and forth on specifics. We did change the parameters, percent up and percent down, which is a little bit too detailed to get into over the podcast, but that's available on our website. This takes place with the short-term options only beginning October 1st. Yep. So it's the Monday, Wednesdays, and non-third Fridays. Now, the Mondays and Wednesdays, as an example, to point out, comprise now about 15% of our total volume. And we only list 2 Mondays and 2 Wednesdays. So those 4 options, expirations alone, comprise about 15% of our volume. So we're going to take a look at the results of this, adjust course if needed, but we think it's a step forward.
No, I think that's definitely a step forward. You lament that it took you a year to get it done. At least you guys got it done. There are whole other parts of the options universe that would love to see something done on this front, and they're still hemming and hawing and discussing the best way to do it. So the fact that you guys over there at CME actually did something about it is certainly worthy of note. I want to see how this plays out. I said it comes into effect October 1st. I definitely want to see how that plays out, because I think this will have some interesting ramifications for the rest of the space. For so long, the answer has always been, Tom, and you know this, it's been more is better. More options, pun intended, is better. Give them more strikes, more this, more that, and people will trade more. And then we've seen over time that isn't actually the case. And it's actually at a point now where it's probably having an adverse impact, all these additional strikes and everything. So if we maybe slow that roll on that front, I think it could have some beneficial effects overall. And you also mentioned, Tom, I want to hit on too, you mentioned the growth in the Wednesdays and the Monday weeklies. I kind of joked about it before, but it sounds like from your response, those are doing well, but we shouldn't expect, Tuesday, Thursday contracts anytime soon?
Well, I wouldn't think so. We have a rather complicated symbology syntax here at CME. That's the next on our list compared to OCC symbology process. So we're addressing that this year. And if we ever got to a date-based symbol where customers could look up an option based on its expiry date, we might be able to add those Tuesdays and Thursdays. But I don't think we're missing anything right now. Today's Thursday. There's an option that expires tomorrow. There's one that expires Monday, and the next Wednesday. I think we've fairly well covered from the client demand side. So keep that in mind. Again, that's we're not hearing a lot of client demand for a daily option at this time.
Yeah, I get that question a lot, Tom. So I'm just bouncing it off of you, so you can answer it for me rather than me. We get that question on a regular basis. When will we have daily trading? I will probably get there eventually, but we're also talking on the one hand about delisting, on the other hand about adding more days. So we giveth with one hand, we taketh away with the other, Tom. I'm sorry. Go ahead.
My answer to that question is, just wait a day and you'll have it the next day's option.
There you go. Be patient.
They come at you quickly.
Be patient. Go ahead, Tom.
I wanted to highlight one point. The equity option growth story is a phenomenal growth story. We're up 19% again this year, and I think over the last 5 years we're up about 35%. But it lives within a world of the CME futures option story. And in aggregate, year to date, we've traded about over 4 million options when you aggregate all the asset classes together. And a lot of our initiatives, such as the weeklies, strike arrays, etc., Globex technology enhancements, come from the option business heads working together in a concerted effort to deliver against customer demand. So that's been a very exciting initiative to be part of here.
Yes, that is fascinating stuff. Speaking of fascinating, we don't get a chance often on this show to break down the big bad boy there, the EMini S&P 500. A lot of you guys like to sling that out there in the audience. So I thought we'd take a chance because we're talking so much equities now. We touched on Russell, or let's talk on the EMini as well, because I know a lot of you guys, like I said, like to sling this one. Again, you can follow along, cmegroup.com/TWIFO, generate your own reports. You see, and we're selling off a little bit today. The broad equities kind of been selling off today in general. Kind of depends where you're looking. NASDAQ, E-mini, Dow, which one's selling off the most? Tech-heavy NASDAQ taking it on the chin the worst right now. S&P kind of the Goldilocks, only off a mere 20 handles in the E-mini here as we're talking, so not even a full percent out here. Vol coming up, as you might imagine. I mentioned before, Russell Vol coming up also. Of course, E-mini, S&P Vol coming up out there. A couple of handles depending on where you're looking, so a good day for those premium, long premium folks. We talked about SKU before. SKU, kind of pretty much the same deal right there. The big month out here right now with about most of the volume, about 23%. Usually you have to look at the weeklies. It's actually the SEP contract right now, about 23-24% of overall weekly volume coming up in that SEP contract, with the puts out there a little bit richer this week, about 22.2% versus 20% last week. The calls also a little bit more offered, about 14% versus 14%, I should say, cheap to the at the money versus about 12.2% last week. So kind of similar story we said with the Russell, puts getting a little bit more bid, calls getting a little bit more offered here. In terms of the big trade, I said most of the volume was in the SEP, but it was actually looks like this weekly contract that expires on the 28th is where the action was. At 2,800 puts, lighting it up this week, number one with a bullet. 26,658 of those hitting the tape. Almost all that happening on Tuesday, 23,000 and change going up then. 15,000 of that opening, so a lot of opening near, not quite that near now, but not an opening even number downside puts here coming up in the S&P. Probably not too surprising to a lot of people given what we're seeing out there. Broad concerns, broad sell-offs. Puts dominate in the tape. That's probably not surprising here. Let's look here really quickly in this same month. Number two actually were a lot farther out of the money puts. The 2650 puts, 26 half puts also in this contract, doing about 21,000. Looks like it might have been a bit of a vertical here because we have about 20,000 plus going up on the 26 half of the 2800s, closing on the 26 halves, opening on the 2800. Maybe taking a chance to roll a bit up on Tuesday with a little bit of a rally there. Either way, I'll have to dig into the blocks to know more for sure. It looks like a bit of a vertical. 26 half, 2,800 put spread going up on Tuesday here. Net closing about 5,500 on the 26 half puts there. And then we jump up a little bit again back to the first week. The weeklies are going away here tomorrow. 2870 puts, so pretty much at the money puts, slightly out of the money puts here. Taking number three with about 15,000 and change. Actually, I take that back. That's number four. Number three is on our top five is all the way out here to the OC contract, OC 29.5. So if you're a bull, you're not forgotten out here in the E-mini this week, listeners. With 17,000 of the 29 halves and OC going up, about 18.5 total for the week. So Tuesday was where the action was. A lot of that pent-up demand from the holiday weekend coming in. About 15,000 of that opening over here on the 29 halves. So it's not all downside puts. There is some upside call action going on up here as well. And rounding out our top five, actually looks like it might have been a vertical here as well. 3,000 calls. Try saying that out loud. 3,000 calls in the E-mini. 17.5 of those. Looks like a vertical. 29.5. 3,000 vertical went up about 17,000 times on Tuesday. Opening on both months, or on, I should say both strikes. So a bit of an opening vertical here. So kind of some verticals dominating our top five here in the E-mini this week. I was looking really quickly to see if we can see some crazy strikes across the board. Any crazy opening paper. 2220 puts, pretty popular out here in March of 2019. Those are pretty far out of the money puts, doing about 6,000 contracts this week. 18 quarters, doing a little bit, not a ton there. And 2180 calls, which is a strange strike, but deeply in the money. 3,000 of those, maybe someone closing a position that's gone their way very well. Other than that, a lot of interesting stuff. Tom, here, before we move on from equities, we've been talking equities for a while now here. Anything else you want to leave us with on the equities front before we dive on to some other products?
Sure. So we have, on the future side, we have a change coming next week, September 10th, with the launching of the E-mini S&P sector, new sector, the S&P Communications Services Select Sector Futures Contract. which is being added because S&P Dow Jones indices and MSCI have plans to revise its global industry classification standard sectors of information technology, consumer and discretionary, and telecommunications on September 21st. So basically, it's creating a new sector. 26 companies, including AT&T, Verizon, Facebook, Netflix, Google, etc., has a market cap of about $97 billion. So stay tuned for that. And then, obviously, a lot of headlines on Bitcoin futures. We're averaging about 3,500 contracts per day. The key evolutionary step is this year the basis between the Bitcoin futures and the cash market has narrowed, which demonstrates efficient price discovery on the futures side. We have 4 expirations, open interest in all 4 expirations, and we have about 1,000 accounts trading the Bitcoin futures product.
Yeah,
on the future side.
Yeah, you mentioned the crypto. I want to get into that in a second too, but just wrapping up really quickly on the equities. It's kind of funny. We're talking about delisting on one hand, Tom, and then on the other hand, talking about new contracts coming to them on the other. So if you're worried about lack of choice in the equity space, don't worry. Just new stuff coming. The S&P Select Sector Communications contract coming on Monday, actually. So a lot of stuff coming in your neck of the woods here, Tom. Tom, since you mentioned crypto, I want to dive into that a little bit as well. Everybody out there loves crypto. I had a fun time talking with Julie, your Chief Commercial Officer, on the crypto derivatives panel that I did a few weeks back at the Voice of Blockchain event. If you missed that panel, listeners, you weren't able to come out to Chicago to make it. I understand. You come from all over the world. Can't come to Chicago. We put the audio up there for you on our feed. So if you subscribe to our network, you can get it. If you don't subscribe, you just listen to this show maybe, go check out the special events feed. You can check it out there and get that audio. It was kind of an area recording. We couldn't get it straight up on the mics, but it should do the job of letting you hear what's going on. There's also some video floating around out there. I'll see if we can grab that and maybe post it on our YouTube so you can see that out there as well. But you mentioned, of course, all things crypto. It has been an interesting time out there. In fact, as we're talking about it today, Bitcoin and all crypto in general kind of on a bit of a rough road, off about 15% over the last 24 hours or so. A lot of people are saying, the rumor for a while there when I was at that conference a couple weeks ago, the rumor was Goldman staffing up. They're talking one thing about crypto, but they're staffing up on the other side. They're going to get into it. Well, now it sounds like that rumor has been squashed for the time being. So Bitcoin taking it on the chin, off about 520 handles as we're talking right now. The CME set future at 63.80 right now. Doing a lot of paper out there as well. 5,600 contracts just in that future alone, with all the months added in, pushing about 6,000 contracts, which is, Tom, that's one of the things we talked about on the panel. I'd like to get your thoughts on that as well. It's been surprising to a lot of people, myself included, because you guys, when you launched last year, you made the choice to go with the beefier, meatier 5-coin contract. And it seems like that was the way to go. Your future is doing the lion's share of the volume. Has it been surprising to you? I mean, people have been gravitating towards a heftier contract out there, a 5-coin contract, Tom?
Well, I don't think we're surprised. Obviously, the size of the contract is tied to the index level of the contract, right? So the notional value of the contract itself moves around quite a bit, as you pointed out. We have a top-tier group of firms providing liquidity in this product. We are an experienced futures exchange with broad distribution of clients and members to support new products. I do think we have to keep in mind the 2 elements here. One is customer demand that we've spoken about drives initially mostly everything we do. And then we also have to think about the evolution of each product, especially the newer products, right, that take a period of time to evolve. So I started here 14 years ago, and we were doing about 400 EMini option contracts per day, 400 as in one less than 401. And now we're doing about 734,000 contracts a day, but it took 14 years. So the evolutionary stage is important to keep in mind with every product and every discussion we have about the future of a product, I think. And this is early days, obviously, for Bitcoin futures.
Yeah, you're right. That's a good point. People have been bringing this up to us for a while, ever since you guys and SIBO launched their contracts last week. Because the question's been when we're going to get options, when we're going to get options. In fact, people asked it to me as I was walking on stage for that panel last couple weeks ago. So it's the big question. I put it to Julie. I'll let you guys listen to her answer. I think we have another question about that even today. So maybe Tom will get a chance for you to weigh in on that in a little bit when we get to our listener mail over here. Really quick, wrapping up on crypto here. It's not just all Bitcoin. It's mostly Bitcoin. It's about 80% Bitcoin volume out there, but the other coins, the altcoin as they're known collectively, also taken on the chin over the past 24 hours or so. Their collective market cap down to about 200 billion. That's down about 30 billion collectively just in the last 24 hours. So Ether also approaching a 1-year low. So a lot of the coins out there, a lot of the crypto out there, not just Bitcoin, taking it on the chin. But the future is lighting it up today. If you are so intrigued. Speaking of lighting it up, I know you guys are big on crude. We can't do a TWIFO without touching on some crude. We're seeing crude today taking a little bit of a break, off about 2 handles net on the week. We saw the futures kind of heading lower today. This is kind of, again, off of this potential concerns of, demand out of China getting weak on the back of this back and forth with the trade war here. We're seeing the WTI contract right around 68 coming into the show today. This is in spite of the fact that we saw actually some somewhat bullish info coming out of the EIA. They reported that domestic crude supplies, remember, it's always this kind of give and take, push and pull between domestic production and supply versus the demand side of the equation out there internationally. And the domestic supply side showed crude supplies actually fell by about 4.3 million barrels. That was more than people actually expected. So you think that would have maybe buoyed bulls out there a little bit, but it wasn't enough to overcome the concerns, at least so far, not enough to overcome the concerns. Also, we saw earlier in the week some concerns about the hurricane, the tropical storm that was forming out there. Maybe that would cause some damage to the ecosystem over there in the Gulf when it comes to refining and then harvesting the oil. And yet that didn't really materialize either. So all the bullish signals we had coming into the week in terms of crude didn't really materialize. Crude, like I said, taking on the chin off about nearly 3%, 2.75% coming here. Vol, as you might imagine, ticking up. You guys can follow along, of course, cmegroup.com/TWIFO. Go to the top left, drop down there, select energy, then select WTI, and you'll be off to the races on this one. Vol kind of popping up depending on where you're looking out here, where number one is. In terms of where the action is out here, yet again, it is in that front October contract with about 11 days to go on that one. Number one with a bullet out here in terms of overall volume, 43%. Still dominating the tape, about 3% increase overall in OI this week so far. And number one trade in WTI out here, number one with the bullet, is actually, as you might expect, sell off at the 68 level right now. 68 puts are where the action is out there in the OC contract, doing about 21,000 and change, pretty much even throughout the week, 5 to 8,000 each day. Net closing on the week about 2,800, maybe, so we had some hedging when we hit that strike. They closed it out, either way, closing on those puts. Then we dropped down a little bit, number two, the 67 puts, so a little bit of a put strip there, about 16,000 going up this week, pretty even again throughout the week, slightly opening, so a lot of back and forth as you would expect on both of these very active strikes. Then we come off a little bit again, 65 puts, a little bit farther out of the money, number three, about 14,600. Again, pretty even throughout the week with about net slightly biased opening. So a lot of back and forth action on this whole front month kind of put strip, 68 down to 65. Also worth noting here, there were some calls lighting up this week, in particular 75 calls, 12,000 and change going up. The lion's share on Tuesday, about 7,000 going up there. Total on the week, about net closing, about 2,200. So maybe someone giving up the ghost there on the upside or covering some short calls up there. 72 calls, number 4, about 10,600 of those this week. Even about 5,000 on Tuesday, about 3,900 going up today. Net slightly opening, but not really, no real bias. A lot of back and forth on those 72s. Rounding out our top 5 here is we have the 70 calls, 8,600 of those going up, about pretty even throughout the week, net about 1,000 of those closing. Let's just scan around here really quickly to see if we can find any interesting strikes. If you're a bull out here, then you're going to like these Feb 2009 95 calls going up 2,900 times this week. So maybe some outsized bullish love out there. 70 calls, also pretty active in June of next year, June 2019, about 5,600 of those going up. Let's see really quickly any other outlandish, crazy, fun strikes. 45 puts, doing about 2,000 contracts in January of 2019. So a little bit of put action out there, depending on where you're looking. An interesting week out here in Crude. Let's look at the skew here really quickly before we keep moving. Again, the action was primarily in that OC contract, so we'll look there. The puts actually coming in quite a bit. The puts were about 5.2% rich to the at the money, now about 2%. So coming in quite a bit, and the calls were pretty aggressively offered, about 2.6% offered to the at the money. Now they're pretty much in line with the at the money vol, which is kind of interesting. So we're seeing a little bit of firming up with the call wing and the put wing coming in here. Which is kind of interesting, again, as you're moving down that skew line. It's kind of what you'd expect, but a little bit more pronounced than perhaps you would expect there. All right, let's see here. Really quickly, let's jump to the metals here really quickly, and then we'll get to some of your listener questions. We're not even going to have time for gold today. Let's just jump in really quickly. Our old buddy over there at CME, Eric Norland, been on the show many times, putting out some interesting research, this time in aluminum, or as you Brits like to say, aluminium, and some interesting research, aluminum supply and demand dynamics. You can find it over there on the CME website if you are indeed so inclined. Aluminum prices soaring between January and April, as you might imagine, given kind of anticipation of the import tariff. But a lot of interesting breakdowns, a lot of interesting great charts here, looking at some interesting stuff. U.S. tariff probably he thinks it's going to reduce the quantity of aluminum used in the U.S., resulting in a small but measurable supply glut in Europe and Asia. So some takeaways from this research. Again, you can read the whole thing for yourself. U.S. tariffs have raised U.S. aluminum prices, but may be lowering prices elsewhere in the world. Chinese demand, as always, is going to be critical for the future direction of aluminum. That's pretty much for most commodities, you can say that. Any slowdown in China could create a global glut that could depress prices, particularly in Europe and Japan. And the main downside risk to U.S. aluminum prices could be the sudden actually taking away of those tariffs. Then we could see a little bit of a free fall there. But of course, looking at what we're seeing out there in the options and the futures market, not really thinking that's too likely to change anytime soon. I've got to have Eric back on again. He's got a lot of great papers he's put out recently, so we'll have him come on, talk about his fun stuff. Meanwhile, though, time for fun stuff. It's time for you guys to take the reins with some of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to the Futures Options Feedback, the portion of the show where you guys take the reins. Tom, I hope you came ready and prepared to answer some questions. Are you ready, sir?
Sure thing.
All right, let's get to it. First off, let's pay off, Tom. We asked everybody a question of the week in our audience. This week was the truncated week. We were on vacation, so we didn't do it. But last week we asked them, heading into that big crypto panel event, we asked you guys, what are you interested in the crypto derivative space? What would you like to see listed next? We gave you 4 choices. Bitcoin options, Ripple options or futures, Ether options or futures, or Litecoin options or futures. Tom, I'm going to let you go out on the wild limb and guess. What do you think people chose, sir?
Bitcoin options.
Yes. How could you possibly guess that, sir? 70+%, I think 72 somewhere in that north of that percentage wanted Bitcoin options there, Tom. So there's a bit of a focus there when you're looking at that. Also, we have a comment here came from Ledger 8. They said they enjoyed my panel there on crypto derivatives. A good job hitting the big points. Well, thank you, Ledger 8. Flattery will get you everywhere. They continue to write here, but I was disappointed that Bitcoin options don't seem to be on the radar anytime soon. The CME rep made it sound like we won't see them listed this year. Bummer. Yeah, I'm kind of with you there, Ledger 8. You know, if you guys remember, we took a lot of polling of you guys when the futures first listed last December. Everyone was hot and heavy for the options. We made a poll beginning of the year back in January. I have to see if I can even pull it up now, get the results for you. But people were overwhelmingly guessing that we'd see the options by Q1. I was the laggard of the bunch. I guessed a comparatively pessimistic Q2. We're obviously now coming into the tail end, getting into Q4 here, and we still haven't seen them. So yeah, Julie made a sign we're not going to see them. Tom, is that pretty much your takeaway as well? This falls under your purview over there on the equity team. It doesn't seem like we're going to be seeing. Do you agree we're probably not going to be seeing Bitcoin options, at least from CME, anytime this year?
Well, I'm going to echo Julie's comments, just from the perspective of it's from my experience involved with, as I said, the products we list are driven by customer demand. So we have to give that some time, from the lens of, as I've spoken to a few times today, our evolutionary perspective. But we listen to all the key participants and, stay tuned for the future. But at this time, we really can't comment on future demand for a product.
Tom, we asked our audience. Actually, this was right around the time that you guys launched the futures. This is Christmas, actually, of last year. In December of last year, the futures were hot and heavy. So we polled our audience, took the pulse. Everyone was talking Bitcoin options. We asked them, we said, hey, when do you think we'll see these things go live? We gave you 4 choices, Q1, Q2, Q3, or Q4 2018. 38%, Tom, guessed at the time Q1. 33%, I was in that group, guessed Q2. 15% Q3, 14% Q4. So it seems like our audience was a little bit optimistic on that front. But just from judging from our audience and talking to you guys at the event and your questions at the panel, there does seem like there is demand for this. So hopefully we'll start seeing some of these things. I know I myself would have loved to put or two over at this time. I'm sure a lot of you out there would have as well. Let's see. We got a bunch of questions here. We got some time to get to a few more here. Here's one that's right up your alley, Tom. This comes from Allani. They say here, I trade a fair amount of EMini S&P options. I'm eyeing the Dow, but I don't see a significant amount of volume there. I've heard you mention this before on the TWIFO program. Why do you think the S&P contract generates so much more interest than the Dow contract? After all, the Dow is probably quoted more in the media than the S&P. And you're right there, Allani. That's something we've talked about on the show before. I'm looking here at, let's just pull up for a sake of comparison. Again, you can do this yourself, cmegroup.com/TWIFO. Go pull up equities on the drop down, then go to E-minis. You can see, let's just look at this week, how much is on tape this week. So we're seeing, just volume, open interest wise, about 404,000 hitting the tape. Volume wise, looks like about about 1.7 million. So serious volume there in the E-mini S&P. Then let's look at Dow, and let's do a similar for the Dow. And the Dow on the tape is, shall we say, a fraction of that on there. So, Tom, it's kind of a question we've gotten before. I'd be curious to get your thoughts on it. The Dow, this is more maybe of like a 10,000 foot level question, but the Dow is widely quoted, widely disseminated. Most of the major outlets, if they only quote one thing, they're going to quote the Dow. You watch the nightly news, it's the Dow's down, it sounds better, down 100 points, or up 100 points rather than down 5 or whatever. But yet the S&P is where the action is. Why do you think there's this disconnect in the space, and why is so much oxygen in the room going to S&P as opposed to Dow, Tom?
Well, good question. When you think about it, derivatives provide two activities for investors, either trading or risk management, right? So obviously the 1.7 million futures contracts that trade in the S&P, EMini S&P is a significant number compared to the smaller amount in the Dow. Therefore, there are more participants managing that risk with our options, S&P 500 options, and therefore that creates more trading opportunities for people who are just trading, not necessarily managing risk. In the S&P 500 suite, there are other S&P 500 options, right? There's SPX options, Spider options, and the CME suite. So the market structure of the S&P 500 option universe is significantly larger than the Dow universe. So I mentioned our validation steps, and we drill obviously beyond the popularity of the index itself, actually connecting with end users as to the trading advantages that product provides or the risk management advantage it provides. So those sort of add up to a basket of answers to that simple question. But the liquidity is there based on demand. And I think Sean said earlier, liquidity begets liquidity, so it sort of feeds on itself. So that's where we are.
Well said, sir. That music unfortunately means hard to believe, Tom. It's already been an hour. We've already come to the end of our weekly sojourn through the world of all things futures, options. I want to thank you guys for joining us as usual. We love to have you join us, whether it's on the podcast, whether it's live, whether it's after the fact on the app, on the website, CME site, however you get the show. We love you. Thank you for tuning in. And before we go, let's go back around the horn one more time. We'll start with you, Tom, because you've been my compatriot here for most of the show. You touched on a lot of cool stuff that's coming out of the CME equity complex coming up. We mentioned, of course, the strike changes coming up soon. Also, of course, the S&P sector, easy for me to say, S&P Select Sector Communications contract. That's launching on Monday. So you guys have a lot of busy stuff coming up. Anything else we didn't touch? Anything else you want to leave our audience with? Any hints, any teases of fun things coming down the pike from the equity complex, equity team? Now is the time, sir. The floor is yours.
Well, thank you. I think we're up to date. We've covered a lot of territory. We appreciate the time, and we'll be open to more questions next time.
There you go. Well said, Tom. We did cover a lot of territory, so hopefully you're not too worn out. We'll give you a little bit of a break before we come back here. So, Tom, I won't make you talk the whole hour next time. Don't worry. There's a lot of fun stuff going on in the equity land. We haven't had a chance to check in on it in a while, so that was kind of fun. You guys love your equity, so I know you're not too upset. You always want more equity all the time, so there you go. You got your dose this week. Of course, if you want more equity, head on over to FTSERussell.com, FTSERussell.com. That's where Sean and his team are working on a lot of cool products. You guys are asking us about them all the time. You want to see them out there listing and trading, head on over there, check them out. Give them a follow at FTSE Russell over there on Twitter as well, so you can stay on top of all that data, all the research, the benchmarking, the volume, all the stuff they put out there all the time. They have it coming out for you over there as well. And of course, I'd be remiss if I didn't mention my good buddy, Mr. Nick Howard over there, the keeper of all things Quick Strike. You couldn't join us today, but, we always use the platform here on the show. You guys can check it out for yourselves. The reports are at cmegroup.com/TWIFO. If you want to do the deep dive, and quite frankly, if you're trading these products and you're not using this platform, I don't know how you're doing it. It's kind of the only game in town when it comes to analytics. The best place to go to really kick the tires and light the fires is bantix.com. That's BANTIX.com. When you go there, you'll see a bunch of stuff over there. You'll see Quick Strike, you'll see Quick Vol, a bunch of other stuff there. Click on that Quick Strike there. Just go to the bottom there, scroll down a little bit below the fold. You see Try Quick Strike Options Analysis Software Now. Bam! Click that button. You're off to the races. Make sure you let them know that you heard about it on the TWIFO show. So Nick knows where you guys are coming from. We like to hear that kind of stuff. So head on over, bantix.com. Try out Quick Strike for free. It doesn't cost you anything. And quite frankly, if you trade this stuff, you probably should be using it. Bantix.com to learn more. And on behalf of Sean and Tom and Nick, who couldn't make it, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, sending in questions, all the fun stuff that you guys do. Keep them coming. And we'll see you next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.